Hi everyone, welcome back to Saheb Academy. Today in the 16th video of Consolidation chapter, we are going to understand this negative minority interest, a small topic but really important because it has been examined before. A problem on this has come in May 2019 paper of CA Intermediate, okay? So that is why you have to properly understand this. And believe me, it's really simple and straightforward. So let's understand this. Now see here, you already know what is minority interest. It is just that part of the net assets which is not owned by the holding company, isn't it? Suppose for example, there is a company called as ABC Limited and XYZ company came and acquired 80% stake of this company. So that 80% stake is called as majority stake, and the remaining, the other shareholders, that 20% stake is called as minority interest. Is it clear? It is that part of the net assets which is not owned by the holding company. Clear? Yes, that's what minority interest are. Now, how do you calculate the minority interest in this consolidation chapter? You all know you just have to take the minority percentage of everything of subsidiary. Okay, minority percentage of share capital of subsidiary, minority percentage of capital profits of subsidiary, minority percentage of revenue profits of subsidiary. Add it all up, you will get the figure of minority interest, isn't it? Yes, that's what you do. Now, how we used to do it in our working notes? First, we used to prepare statement of net assets. In that, we used to break the net asset into pre-acquisition and post-acquisition. Yes, so we used to have two different types of net assets. Pre-acquisition net assets on the date of acquisition. What is that? That's share capital and capital profits. Okay, so just take minority percentage of that, and then post-acquisition net asset means what? It means revenue profit. So just take minority percentage of that, add it up, you will get the same answer, minority interest. That's how we used to do. If you have seen our previous videos, then you will find that's how we used to calculate the minority interest. Is it clear? Really simple. Pre-acquisition net asset and post-acquisition net assets, just take minority percentages of that, you have got the whole figure of minority interest at the year end. Is it clear? Okay. Now, this is the basic concept. Fine. Now let's come to the main point, negative minority interest. How does the minority interest become negative, and what is the meaning of that? It's really simple. It means that subsidiary company is making the losses. Okay, see here, minority interest can become negative if subsidiary company suffers losses. Okay, they are incurring losses and minorities share in losses. See, once acquisition happens, right, and then what will happen? Either there will be revenue profit or revenue loss in the post period, and post period will be very long, na? Like second year, third year, fourth year, and so on. It's the post period only, isn't it? Yes. So after the acquisition, there can be profits happening or losses happening. If there are losses, then what can happen? See, MI's share, minority interest share in losses, in subsidiaries losses may become more than what? Then MI percentage of share capital and MI percentage of capital profits. Okay, if that happens, then the figure of minority interest, the end figure of minority interest will become negative. Okay, in that case, what you have to do, understand, according to AS 21, what you have to do is, see here, you have to show minority interest as nil. AS 21 says you cannot show the minority interest as negative in the balance sheet, in the financial statement. No, you cannot do that. What you have to do instead is you have to show the minority interest as nil. But you will ask, but sir, there is a loss, there is negative balance in MI. So how will we treat that? We can't directly put it as nil and just leave it like that. Of course, we can't do that. We will put the minority interest as nil, but that loss has to be suffered by someone. Someone has to bear that loss. And of course, who will bear the loss? The big brother. Okay, holding company. Holding company will bear their loss. Understand? It's really simple. Show minority interest as nil. Negative balance of minority interest should be adjusted to consolidated P&L. Consolidated P&L means what? It means holding company. Okay, holding company has to bear the loss till it becomes positive. What becomes positive? The minority interest figure becomes positive. Till that, who has to bear the loss? Let's just say, for example, in the next year there is a loss, and loss consecutively there are losses. So till the minority interest becomes positive, holding company will have to keep on bearing the loss of the minority interest. Is that clear? And then once it becomes positive, then holding company has the right to recover the losses which it absorbed of the minority interest. Okay, see here, once MI becomes positive, loss borne by holding company of minority will be recovered. Is it clear? So basically, if MI becomes negative, then holding company has to bear the loss, and in future holding company can recover from minority if MI becomes positive. See, what will happen is subsidiary company will let's just say after 3 years subsidiary company will start to make profits. Okay, if it is making profits, then minority will get share of that profit, but that profit will not be given to minority interest. Instead, that profit will be adjusted, that profit will be given to holding company basically. Okay, it will be credited to profit and loss, consolidated profit and loss. Okay, it will be adjusted like that. Don't worry, we will see a problem on this properly and you will understand how it will be done practically. Okay, so you understood now. If MI becomes negative, holding company has to bear the loss till the MI become positive, and then in future when subsidiary will be making profits and MI will be receiving the share of those profits, at that time profits will not be given to MI, it will not be given to minority, profits will be adjusted against the losses of minority which was absorbed by the holding company. Okay, right, don't worry, we'll see a problem and you'll understand how this will happen practically. Let's go to a problem. Now see here, we have the problem on negative minority interest. This question is from the ICAI study material illustration 4, but from our series this is the 7th problem. Let's read the question. See here, A Limited acquired 70% of equity shares of B Limited on 1st April 2021. This is the date of acquisition. For how much they acquired? For 10 lakhs. This is the cost of investment. When B Limited had an equity share capital of 10 lakhs and reserves and surplus of 80,000. You see, directly they have told you what is the equity share capital and reserves and surplus on the date of acquisition. So here you have pre-acquisition net asset directly given in the question. Okay, this 10 lakh plus 80 is what? Pre-acquisition net asset, 10 lakh 80,000. Is that clear? So this 80,000 would be pre-acquisition reserves. Okay, pre-acquisition reserves, or you can call it as capital profits. Clear? Okay, and minority stake is 30%, isn't it? 70% majority, 30% minority interest. Fine. And then they are saying in the 4 consecutive years, B Limited fared badly and suffered losses of 2 lakh 50, 4 lakh, 5 lakh and 1 lakh 20,000 respectively. So consecutively year by year, the subsidiary company is making losses. Is it clear? Thereafter, in 2025-2026, B Limited experienced turnaround and registered an annual profit of 50,000, and then they had a profit of 50,000. In the next 2 years after that, 2026-7 and 27-28, B Limited recorded annual profits of 1 lakh and 1 lakh 50,000 respectively. Show the minority interest and cost of control at the end of each year for the purpose of consolidation. So what is the requirement of this question? The requirement is we have to calculate minority interest and cost of control. Okay, let's begin. Now let's understand how to solve this question. It's really simple. The first thing that you have to do is you have to calculate the minority interest and cost of control on the date of acquisition. Okay, you have to start from there and then you have to go on calculating MI and COC at the end of each year consecutively. Okay, let's start. See, the first thing is for cost of control, what do we need? For cost of control, we need cost of investment. How much did the holding company pay? That's 10 lakh. Fine. How much net asset did the holding company got of subsidiary? How much? 70% of the net assets. But what are the net assets over here of subsidiary on date of acquisition? 10 lakh and 80,000. If you add these two, you get 10 lakh 80,000. Isn't it? This is the net assets on the date of acquisition. See here. Net asset on the date of acquisition, equity share capital plus 80,000 reserves and surplus, that's equal to 10 lakh 80,000. Clear? Yes. So what we have to do to calculate cost of control, we have to take cost of investment 10 lakh, which is given over there. See, yeah, and then you have to subtract net assets of subsidiary owned by the holding company on the date of acquisition. That's 7 lakh 56. How did we get this 7 lakh 56? It's really simple. Just take 70% of this, you will get this 7 lakh 56. Is it clear? Simple and straightforward. Now if you subtract these two, yeah, 10 lakh minus 7 lakh 56, you will get 2 lakh 44. That's the goodwill. Yeah, that's goodwill. Yeah, 10 lakh minus 7 lakh 56, 2 lakh 44, that's goodwill. And this cost of control, this goodwill will not change. It will remain same. Okay, always same. Why it will not change? Understand. Let's just say you have purchased a calculator in this year. Okay, and you purchased it for, let's just say, 150 rupees. Whereas you can get it for 100. The real value is 100. You have purchased it for 150, 50 rupees extra you have paid. Okay, 50 rupees extra. And this happened in year of 2022. Now, if I ask in 2028, how much did you pay for that calculator? Will you say 200 or will you say 500? Will it change? No, you will say I paid 150. The real value was 100, 50 rupees extra I paid. So that fixed 50 rupees was kind of like goodwill, isn't it? Isn't it? Yeah. So similarly here also holding company will say the same thing. The extra thing which I paid over the net asset is 2,44,000 and that's my goodwill. That's my cost of control. Is that clear? It will not change. No matter how many years pass by, cost of control will remain the same. Clear? Easy. And then minority interest. How do you calculate minority interest on date of acquisition? It's really simple. Just take 30% of this. Okay, just take 30% of this. You will get 3,24,000. See? 10,80,000. This is what? This is pre-acquisition net assets on the date of acquisition of subsidiary company. Of this, you just have to take 30%. So that's equal to 3,24,000. Okay. We are calculating on DOA now. That's why we are not considering the post movements and all. Okay, fine. Now, once you have this, once you have done this much, now what you have to do is you have to prepare this table, to do the proper calculation of minority interest. How much loss is happening, how much loss will be borne and everything. Okay. Now, cost of control will not be calculated and all. Once you have calculated over here now, 2,44,000. So it will remain the same. See, 2,44,000. Every year it's same only. 2,44,000, 2,44,000. Okay. It will not change. So many years have passed by. It's same only. Fine. Let's understand how the minority interest thing will happen. Okay. See what you have to do. Let's understand the table first. Here we have the year column, profit and loss column of whom? Of subsidiary. Okay. How much profit or loss is there in subsidiary? That's what will come over here. And then here you have minority interest. What will you do over here? Simply just take percentages of this. Okay. 30%. Okay. That's what you have to do. Just the minority share of the, the subsidiary's performance you will consider. And then here we have additional consolidated P&L column. What is this? This is the holding P&L, right? Consolidated P&L means what? It is the holding balance, yeah, holding balance plus the holding share in subsidiary, isn't it? This is what you do now. But here holding balance is not given. How much holding profit and loss is there? So that's why it's called over here additional consolidated P&L. We are just giving impact in that of this minority and everything. Okay, we don't know the holding balance, so that's why we cannot call it just consolidated P&L. Is that clear? Okay. And then here we have losses borne by holding company. What is this column? How much minorities losses will be borne by holding, that will come over here. Here we have two columns, as you can see over here. One is single amount column. Okay, year by year how much losses we are making, you will take over here single. Okay. And then here this is cumulative column. You will go on adding over here. Okay, you will see how it will be done. Don't worry. And then here cost of control. You already know. Let's start. Now the first date is date of acquisition, 1st April 2021. You have to begin from there. 1st April 2021. What was minority interest? Minority interest was this. That's why we had to do this. Okay, so this 3,24,000 will come over here. Is that clear? Simple. After that, what you have to do, you have to go on looking at the losses. The first loss was this 2,50,000 in subsidiary company, right? So you have to take over here 2021, 2022, 2,50,000. Now of this you have to take 30%, that is 75,000. And then of this 70% will go over here. Okay. See, let me just show you once and then directly I will be doing, okay, to save the time. 2,50,000 into 0.30, that's equal to 75,000. Okay. And the remaining 1,75,000. 250 into 0.7, that's equal to 175. Okay. So that's what you have to do. Just simply take 30% and 70%. Okay. You will get the figures. Fine. Now After that, see here there was a positive figure in minority interest. Because of this loss, what happened to minority interest? Minority interest is still positive, but it has been reduced. It has become 2,49,000, isn't it? It has become 2,49,000. See this calculation properly, okay? 2,49,000. And then what happened next year? In the next year, we come to know, see, 4 lakh loss has happened. How much? 4 lakh. So take it in the profit and loss column, negative, yeah, 4 minus 4 lakh. And then 30% of this is how much? 1,20,000. 70% of this is how much? 2,80,000. Is that clear? Subtract this 2,49,000 minus 1,20,000. It's 1,29,000. See, 249 minus 120, that's equal to 1,29,000. Still the minority interest is positive. Still the rule has not applied. Still minority is positive. When it will become negative, then only we'll see what will happen. Okay. See, and then in the next year, we have a loss. Subsidiary has a loss of how much? 5 lakh. So take it in the profit and loss column, negative 5 lakh. Okay, 2023, 24, 5 lakh. Of this 30% you have to take, that is equal to 1,50,000. Okay, and then of this 70% is 3,50,000. Fine. 1,29,000 minus 1,50,000, that's equal to negative 21,000. You can see, yeah. 129 minus 150, that's equal to negative 21,000. So you see now what has happened? What has happened? The loss, see here, let me just show you the concept. MI share in losses. What was the MI share in losses? 1,50,000. This has become more than what? MI share in share capital plus MI share in capital profits. Isn't it? See here, this 3,24,000. What was this? 3,24,000. This 3,24,000 was the MI share in this. Isn't it? Share capital and reserves and surplus. Yeah, this is capital profit, this is equity share capital, right? So that's what has happened. Yeah, this MI share in losses is greater than MI share in share capital and MI share in capital profit. This is the case. MI has become negative. When MI becomes negative, what we have to do? We cannot keep it as negative. We have to make it nil. Understand? Okay, we have to make it nil. So see, how will we make it nil? It's really simple. There is minus 21,000 now. Just make plus 21,000. It will become 0 or it will become nil. Okay. And this 21,000 will flow over here. To where? To holding company. Because holding company has to bear the loss now. So this minus 21 will go to holding. Okay. And then there will be separate column where we will properly record how much losses are borne by holding company. This is single column, right? In single column directly we will take 21,000 and then this is the balance column. Okay, here also at first 21,000 will only come and then in the next years you will have to go on adding up. Okay, we'll see. So you understood now what happened over here. Minus 21 was borne by the the holding company, and then the recording of that has been done over here in single column and cumulative column. Okay, loss of MI borne by holding company. After that, in the next year, what happened? In the next year, there is a loss of how much? 1,20,000. Okay, so let's take that. 1,20,000 loss is there. Okay, 2024, 25, 1,20,000 loss is there. Of this, 30% is how much? 36,000. Again, this is a loss now, minus 36. Yeah, and there is nil over here. So MI has become minus 36. So we can't keep it as minus 36. We have to make it nil again by giving a plus of 36. Okay. So it will become nil. This 36 will flow over here. Okay, and this 70% is also there. Okay, 84,000. Okay, right. So this 36 will flow over here, 36,000. And then in this year now, how much impact has gone in 2024-25? How much impact has gone in the consolidated P&L for holding company? 1,20,000. How 1,20,000? 84 is the share of holding only, and then minority share in losses is also borne by holding it only. Okay, fine. So that's what it is. And then recording will be done. See, 36 in the single column, and then in the cumulative column, what will happen in the cumulative column? Understand, this 36 and this 21 previously will be added, and this 57 will come. See, 21, let me just show you, 21 plus the current year 36, that's equal to 57,000. Okay, 21 plus 36, that's equal to 57. This is what you do in cumulative column. In cumulative column, you go on adding up the losses. Okay, clear. So that's what happened. And then what you have to do, and then see the next year you have to move on. Okay, in the next year you have to go. In the next year 2025 2026, see here they are saying there is a profit of 50,000. Yeah, registered an annual profit of 50,000. So if there is a profit, then what will happen? 2025 2026 profit is there in subsidiary company. Share of that you have to take 30%, that's 15,000, and then here 70% in the holding, that's 35,000. Now this profit will not be given to minority. No, this profit will be taken back. This profit will go to holding only. So again you have to make the minority nil. Okay, even though minority is not negative, it's positive, but holding company has to recover the losses now which it has borne. How much losses did the holding company has borne? 57,000 in total. Yeah, so this recovery has to be done. So how this recovery will be done? From the minorities profits. Is that clear? So 50,000 profit happened, 15,000 minority got. So this 15,000 will go to holding. Minus 15, here it will be plus for 15. Opposite of the before case. Here there used to be minus, then you used to do plus. Yeah, it used to become nil, and then this used to flow over here. Loss used to flow. Now profit will flow over here. Okay, recovery of loss is happening. Is it clear? It's simple now, you can understand. Now here you used to record now how much loss has been recorded, how much loss has been borne by the holding company. Now that also you have to go on subtracting. See, minus 15,000. Okay, because recovery has done now. Recovery has happened in this year in 2025 and 2026. Recovery is happening. Now the effect of that we have to give in the cumulative column as well. So 57,000 minus 15,000, that's equal to 42,000. See here, 57 minus 15, that's equal to 42,000. Okay, so 42,000 is the loss that is still to be recovered. Okay, clear, easy. And then 2026-27, what has happened? What has happened in the question? In the question, if you see 1 lakh profit has been earned by the subsidiary company, just take that 1 lakh. Okay, 1 lakh you will take, and then 30% of that is 30,000 and 70% is 70,000 for the holding. Simple, easy. Now the same thing you have to do again. 42,000 is still yet to be recovered, so this 30,000 cannot go to minority, it has to go to holding. So minus 30, and now this 30 will flow, this profit will flow to holding company. Okay, so 70 plus 30. So in this year, in 2026-27, holding has made how much profit? 70,000 profit, holding share only, and 30,000 recovery. Okay, so in total it is 1 lakh. 1 lakh positive has gone in the consolidated P&L. Clear? Now immediately what you have to do? You have to record in this losses borne by holding. Now here you have to record minus 30. You have made a recovery of a loss. How much? 30,000, and give the effect in the cumulative column as well. How will you give? Really simple, just subtract. Okay, you will get 12,000. 42 minus how much? Minus 30. Minus 30, that's equal to 12,000. Okay, 12,000. Is that clear? Simple now, easy. After that, in the next year, what happened? In the next year, see here, they have told you 1,50,000 profit has been made by the subsidiary company. Just take it in the profit and loss column. Just take it. It's really simple. 1,50,000 profit has been made. 30% of this is 45,000. 70% of this is 1,05,000. Okay. Now, what you have to do? See previously how much loss has to be recovered. Holding company has to recover how much? 12,000 loss. Yeah. So 12,000 will be recovered. Okay, this is how you have to see. You have to see previously in the previous column, in the previous year, how much cumulative loss is there. Cumulative loss is 12,000. So this much loss the holding company has to recover from minority. So from 45,000 profits, 12,000 will be recovered. Okay, 12,000 will go to holding. Is that clear? Remaining 33,000 is the minorities balance. That's minorities profit. Is it clear? Simple. So the same thing you have to do, in this 2027-2028, how much did the holding company made? 1,05,000 their own share and 12,000 recovery. That's equal to 1,17,000. Sorry, yeah, 1,17,000. And in this year, how much recovery? 12,000 recovery. So 12,000 minus 12,000, that's equal to nil. There is no cumulative loss left. All the loss has been recovered. Clear? It's simple and straightforward. This is what you have to do. This is the single column and this is the cumulative column. Okay, it's really simple. If you have any doubts in this, just comment down below. It's nothing, it's really simple. All you have to do is just take what's happening in the subsidiary company. Minority share will go over here, majority share will go over here, and then you just have to see if mi is becoming negative. What you have to do, see mi has become negative minus 21. What do you have to do? Just plus and make it nil. This will flow over there. Yeah, here plus na, here minus will be there. Yeah, and then loss will be recorded. In positive, loss will be recorded first. Okay, and then cumulatively here it will be recorded year by year. Okay, it was 36 now in the next year, so 21 plus 36, that's equal to 57. This is how you have to do. And when recovery is happening, what will happen? When recovery is happening, minority will be positive. Yeah, minority, see, minority is positive here, minority is positive, but you have to put negative over here. Why? Because you have to make a recovery. Now you can see over here 57,000 has to be recovered, so you will have to do minus 15. Yeah, because 15 is there, minus 15, and give that profit to holding and record recovery over here, and then give the effect in cumulative column as well. So this is how you have to do it. It's really simple and straightforward. It's not difficult. Cost of control is same only. It will not change, as I have explained you, right? It will not change. So that's all for this video. I hope you have understood. It's really simple and straightforward. There was nothing on this. It just looks complicated because it's a bit lengthy. Yeah, and there is a bit format over here, but actually it's really simple. Okay, so that's it for this video. See you in the next video. Bye.